And with four firms lining up their initial public offerings this week, one after the other. Now, these four IPOs belong to diverse segments such as FMCG, healthcare, financial services, and also cables and wires segments. And cumulatively, they all plan to raise about 4,500 crore rupees. Now, first, there's this Bengaluru-based DCX Systems, which is a manufacturer of cables and wire harness assemblies. Then we also have Microfinance lender, Fusion Microfinance. Cardiologist Dr. Naresh Trehan's promoted Global Health Limited will be coming up with an IPO this week, and also Bikaji Foods International Limited. And all of them are going to be very, very interesting to understand about. But which one of this is going to be worth your money? How to select the right IPOs for your portfolio? That's something that we're going to be focusing on in this show. And to share more insights on this, joining in with me is a very special guest. Mr. Pranav Haldea joins in. He's the Managing Director at Prime Database. So welcome to the show. And thank you so much for taking the time out. And great to have you with us on Business Today TV. So first up, help me understand, how do you look at this string of IPOs that are launching? And also after a long haul, we are seeing the primary market buzzing yet again, which has been dull so far. So what's your take on this string of IPOs?
Your company has been incredibly strong, both in terms of companies which have already received approval from SEBI or those which are filed with SEBI for approval. Even as we speak right now, there are over 110 companies looking to raise over 150,000 crore rupees from the market. So the pipeline has been very strong. And what you've seen over the last few months, in the last 6 months, is an extremely volatile market. And historically, also, if you look at the data, it always has told us that IPOs don't get launched in a volatile market. IPOs don't like volatile market, and the reason for that is very simple. That for a particular company, an IPO is a once in a lifetime opportunity, and no company would want to launch their deal in a time where demand is not very certain. You have seen some bullishness returning to the secondary market, and I think that kind of has played a part in some deals getting launched now. At the same time, there are a couple of other factors also which affect deal launches. One is there pressure from selling shareholders? You've seen a lot of companies which have come out with IPOs, which have private equity and venture capital investors who have invested in those companies for many years, and they are looking for an exit because ultimately they also need to return capital to their investors. There pressure from selling shareholders, and second of all, is there capital requirement from the company itself? Company may require capital for both purposes, and under these circumstances, you do see some deals getting launched where there are these two kind of pressures as well. Even if markets are volatile, like I said, that of course there is some sort of bullishness which is returning to the market, which is heartening to see. If it does continue, again, like I said, the pipeline remains extremely strong, and you will see more deal launches.
Right, but what are the ways in which one must really look at this diverse set of companies and how to take a pick, how to decide which one actually suits your portfolio, which is a good IPO to invest in? Help with those insights to all our viewers.
Well, that's a very interesting question. And I think first investors need to decide whether they are coming in for the short haul, for listing gains, or they're coming for the long haul, which is, from investors' perspective. Of course, if you're coming in from a short-term perspective, you look at various things, including gray market and whatnot. It's more of a gamble. We've seen, it works sometimes, it sometimes doesn't work. But we need to be very clear that you're coming in only from that perspective. If you're coming from the long-term perspective, I've always said that you need to be very, very cautious. IPO is like an asset class, right? And on the risk spectrum, I would classify it as even a more risky bet than an already listed company. An already listed company has been in the public domain. There's a lot of disclosure information available about the company. An IPO is an unlisted company. There is an information asymmetry, so to speak. And hence, when retail investors are looking at putting their hard-earned money into IPOs, they need to study the company, look at the prospectus, look at the credentials of the company, who are the existing investors, who is the promoter, how is the board, and of course, then look at the pricing, because you know the fundamentals or the company can be very good quality, but if it's priced, in very expensively, then it still doesn't make for a good investment. I think some of the companies which are getting launched, like you mentioned, the sectors earlier. These are, there are already listed companies belonging to these sectors which are already listed, and that
Yes,
always helps as a benchmark, to kind of do a peer comparison in terms
correct,
of what is the valuation of already listed companies versus one which is coming to the market for the first time. So
correct.
these are some of the factors which investors should look at, and of course, the anchor book is something which retail investors can take a cue from, seeing how it develops, what kind of investors it is attracting.
Right. But would you say that IPOs are a great way to get an early entry into a stock for all the new investors who may be looking at this as an opportunity?
Well, actually, funnily enough, the debate has shifted, and now, there are all discussions about it's too late of an investment, because all the other savvy investors seem to have already made their money beforehand, and
Yeah.
ultimately, divested it all to the hands of retail shareholders. Look, my point of view is that I think there are different kinds of investors in the market. There are angel investors, there is venture capital, there's private equity, and they have their own role to play. What is happening now in the Indian capital market, and this is a sign of a maturing capital market as well, is that early stage companies are first, doing their initial funding rounds and capital raising rounds from these angel investors and venture capital investors. The risk capital is being provided by these investors. After that, you have several rounds of private equity, and only after the company reaches a certain stage, a certain scale, are these companies coming to the public market. So I think that's a very heartening sign. If we look back 30 years, in the 90s, you used to find a lot of greenfield companies coming to the market.
Yeah.
Who didn't have any track record, probably were in operation only for a year or 2 years before they would come to the public market for fresh capital raise. And you saw that a lot of these companies, either vanished, completely shut down. So the earlier you are in a company, of course, the higher the risk. So now I do feel that companies which are coming to the public market,
Yeah.
like I said earlier, have gone through multiple rounds. There's a corporate governance check also, because these savvy investors would not put in their money without doing all those checks. So there's a
Yes.
lot of comfort coming from that. But at the same time, valuations, of course, it's been an eternal debate for the last 20 years. Every time there's an IPO boom, there's a discussion on valuations. Of
Yeah.
course, valuations need to be looked at the time of IPO. Of course.
Right. Like you pointed out in one of your earlier answers, that we also have an opportunity to compare with a lot of peers that are already listed on the stock exchanges. Now, among the current bunch of these four that we are in discussion of, DCX, Global Health, or even Microfinance, they would have some peers to compare their business with. But say, for example, a Bikaji, that's one of a kind. It's a first, perhaps, to get launched in the snacks and the packaged sweets business. How does one really understand that kind of a business, the growth opportunities right there, and whether it would be a right pick?
Well, you may not find a like-to-like comparison, but in the food, space, there are several listed companies, including all these fast food chains which have been listed for some time now. So, the idea behind looking at such companies is to get a broad sense of the valuation, the multiples which, the IPO company is asking for versus its listed peer. You may not find a like-to-like comparison.
Okay. So, we are already seeing DCX Systems get good response 2 days in the running, and we've seen oversubscription and good response from all the segments. What's the response that you're expecting for the rest of them?
Well, like I told you earlier, I do not comment on specific IPOs, but I think what you are seeing is, some of the last few IPOs which have hit the market have got good subscriptions and have also delivered good listing performance. And we've always seen that there's nothing more which attracts investors than listing gains. and a good post-listing performance. So that is what you've seen over the last few deals, and I think that will help these IPOs which are getting launched as well.
Okay, so just like how you pointed out, even those last 2 years have actually seen record number of IPOs, record funds being raised. Do you believe that IPOs seen so far in 2022 have been perhaps of better quality and even perhaps made better money for investors?
Well, quality is an extremely subjective word. Like I alluded to earlier, there are two aspects to an IPO. One is the company and the quality of the company, so to speak, and the other is the valuation. So there can be a very good quality company, but in case the valuation is extremely expensive, it still would not make for a good investment.
Yeah.
So both aspects need to be studied, by any investor before investing in that.
Yeah, but why I asked you this is also because, the way we are looking at how much they talked about, the new age technology companies that were listed last year. They listed amid a lot of fanfare, but how they have performed this year is something as a learning experience for all those investors who went for the brand name, who went for the new age first time, perhaps a new category getting listed on the stock exchanges, who went for all those factors, but we've actually seen many of them slipping below the issue price, new record lows being seen. Is that something that deters the new investors from taking a plunge into the IPO space? And how does one deal with, choosing just the right one? Like you said, it's a gamble. So how does one really look forward towards these IPOs then?
Well, I didn't say it's a gamble. If you're coming in from a long-term perspective, then it need not be a gamble.
Yeah.
Then you need to study and then invest. Coming to your original question, yes, you're absolutely right. Last year when Zomato got launched, it was hailed as the Infosys moment. You did see several new age technology companies coming to the market. There was a lot of positive sentiment at that time. There was also a lot of liquidity. So, the situation, of course, 1 year down the line is very different. Not only has have macro factors changed, but also now I think there is a very hawkeye focus on profitability, which investors are now looking for. So, I think there are several other new age technology companies which are in the pipeline. And, for them to get listed and to get subscribed and to see good investor interest, I think there are a lot of learnings from the IPOs which came to the market last year.
Yeah, but of these four, do you see all of them or some of them at least giving sustained growth and returns on the upside to investors of the long term?
Well, Sakshi, again, I will not comment on specific IPOs, so kindly excuse me there.
Okay, but then how many more IPOs do you see coming in as we approach the year? And you did say that about like hundreds of them are expected, but that's over a course of time. We've just seen the IPO, and the primary market buzzing yet again. So just 2 months to go. How many IPOs can we expect, and what kind of fundraise can we expect?
Well, so primary market is dependent on the secondary market, and you've seen in periods of bullishness or stability in the secondary market, there have been a lot of deals which have got launched, and I think the last 2 years that you also alluded to, the kind of volume, the numbers that you've seen in terms of IPO launches has been incredible. Uh, I think if there are still a lot of macro concerns, the Russia-Ukraine war, inflationary concerns, interest rates have been increased by various central banks all over the world. FPIs, their interest is kind of a hit and miss right now. You are seeing them pulling out and then coming back in, but there's not been sustained interest. So I think there are a lot of headwinds which are there, which would impact the secondary market. I do not expect the kind of flurry that you saw in 2021 to be seen now, but you will see a few deals getting launched here and there. Again, also dependent on the pressure from selling shareholders and the requirement of funds by the companies themselves.
Okay, understood that. Well, thank you so much, Pranav, for being with us and sharing all these insights into what to expect in the IPO space going forward from here. And how does investors really decide as to which IPO suits their basket and their portfolio, how to take that pick as well. Thank you so much for those insights.
Thank you for having me.
All right, and with that, we wrap up this edition of the IPO and the buzzing primary market space right here. You heard Pranav Haldea talk about, what are the ways in which one must identify or one can look to identify the good IPOs from the bad ones. What are the factors one must consider before, investing in these IPOs as well. 4 new companies have already come up with their dates this week itself. 4,500 crores worth of IPOs is what we are seeing, and many more to follow suit as well. So a lot of buzzing action is what we can expect in the primary market space, as along the secondary market space, which is already coming back into, the kind of moves that we had been seeing in the last year. We are again seeing some moves coming onto that front as well. Thank you so much for being with us onto this edition, but do stay tuned on to Business Today TV for a whole lot more information on markets and in the world of business as well.